Hey, welcome back to Two Super Guys Trade Stocks. I am Dylan.
And I'm Vinny.
And apparently, we're in a bull market. So, what are you going to do? When you're wrong, you're wrong. But now I have a bunch of cash that I need to invest in the market. It's time. So, what stocks should I do? We're going to take a look at it and which stocks are the best value right now.
Two Stupid Guys Trade Stocks.
It's a sexy list, buddy.
Yeah, so I'm not saying these are the best value in the market, just to clarify. I want all 6 of these in my portfolio for long term. Okay? So in terms of looking at evaluations and that kind of stuff, we're skipping that part because we've already done that multiple times. I mean, I can't speak for you. I want all 6 of these in some capacity in my portfolio, some more than others. But the problem is the Qs have been on a tear, right? And I was wrong. I was shorting, the tits out of the market. Didn't work. So now I got a bunch of cash I got to put in, but I don't know where to put it. Which one of these is the best deal right now? All right.
Okay.
And there's a caveat. Obviously, the financial sector, if you're willing to hold for 10 years, is pretty cheap. So I am buying that. But of the tech sector, what do I want to have? So follow along, because Vinny hasn't seen this. Follow along. We're going to look at specific details of these 6 stocks and which one you think is the best at the end. All right? Vinny has no idea what's happening.
Yeah, I'm looking forward to it.
So real quick, let's just look at the 6 stocks, how far they're down from their peak, because you're getting a discount and sense of their high of all time versus now, because some are down a lot. Okay? So Apple, 10%. Not that much. Let's be real.
Yeah. I mean, come on. Apple's practically a bond at this point, all right?
Yeah, and that's true. People do see them as a safety vessel, so they have a special attribute. Okay? Microsoft, 17.5.
Okay.
Not bad, right?
It's a better sale. I get that. I mean, this isn't. I'm not familiar enough with Microsoft's kind of revenue and profit numbers, so I can't really speak as much on them. It's not
So
what I own a large amount of.
we are going to look at EBITDA, price to free cash flow, and PE for each one of these, right?
All right.
Now, once
all right.
again, if you're trying to invest in this and you don't know about these companies, you have to do like way more than that. You have to read the quarterly reports, all that. I am already comfortable owning all of these to some degree, so skipping that part. NVIDIA, about 20%. I'm thinking, do you think that's too much?
I mean, I'm just looking at that chart, man. I'm like, Jesus Christ! Like, I don't want to see it put a little bit more support in there.
Yeah. Now, that's true. That's timing the market,
Yeah.
which made me real depressed last time because I sold not well. Google, 31.5.
Love it.
I do own the most of this one. AMD, 40.5.
All right.
Okay. Meta, 45.
Wow, it's crazy to think that after this ridiculous run that they've had, they're still down 45% from their peak. Wow.
Yeah, do you hate yourself for not buying an 80? Because, man, I am so fucking pissed.
I did buy some at 80. I should have literally mortgaged my house and bought more and then not sold covered calls.
How many shares do you have?
30, I think, right now.
Nice. So let's get into a little bit of the nitty gritty here. All right. Can you explain what EBITDA is?
So EBITDA is, according to Charlie Munger and Warren Buffett, is bullshit earnings, right? But it's earnings before interest, tax, depreciation, and amortization. So it's designed to be a proxy for free cash flow or like the true cash earnings of the business before you take a bunch of deductions and from a accounting standpoint.
Right. So basically, press the arrow. Basically, higher EBITDA, better value. Let's just go with that to make this simple. Okay? You want it higher than lower. Okay? Just like the PE, you want lower, and the price to free cash flow, you would like lower. You're getting it cheaper than it usually is. So Apple, we're kind of at an average EBITDA over the last 10 years. If you look at kind of where it's at right now, a little bit of a downslope. The PE ratio is pretty high. It's the 3rd highest it's been in its 10 years. The price to free cash flow is also 3rd highest it's been in 10 years.
Wow.
Okay. So now, once again, this has a special attribute in that if the market tanks, people just put it there. So this one's it's kind of weird.
It's my
Nvidia,
largest holding, so I'm a
well,
little biased.
yeah, I mean, killing it, bro. EBITDA for Nvidia, we're at about average. If you look at the numbers, hanging out around 20. Let me make my face
So
smaller.
this is EBITDA margin, meaning this is like the profit margin of the business. Is telling you
Yes.
kind of what the pricing power is like. That's not just straight EBITDA,
Yes,
which
I
is
should have
a
clarified
cash
that. I
number.
apologize.
Not a problem.
Yeah, even a margin. So here we have the highest PE they have had in ever, at least in 13 years, by a lot, and the
Wow.
highest price for free cash flow by a gross amount, a disgusting amount. Okay,
Uh-huh.
a
Disgusting.
solid price for them was chilling around 50. They're at I think 175.
It's perfect.
That's a lot.
That's wow. Yes.
This is unfortunately, you say AI and the stock just goes to the moon. All right.
Mm.
AMD, pretty high EBITDA margin, not too bad.
Yeah.
It's higher than it's been in quite some time. Mild tail, but we're having some rough economic times, but higher than it's been. All right. The PE, this one's harder to value because they were shit for so long.
Yeah.
So
Unprofitable. So
they weren't profitable. So the PE is 0. So we have less data points to go off of. The PE is higher than it has been the last couple of years in between the 2018 and 2020 value. The price of free cash flow, it's not bad. It's not terrible. Right?
relative to their own history, yeah.
To their own history. That's important. To their own history. Right? It's not bad. Meta. I thought these numbers were going to be better, to be honest. I thought that this would be more attractive. The EBITDA margin has been consistently in a downturn that's been pretty rough.
Yeah.
We're at the second lowest it's been in 10 years.
Hmm.
So that's not great. While we're at the second lowest it's been in 10 years, we're not at the lowest PE, but we are at an average. And we are slightly at the highest or slightly higher average for price of free cash flow. They're not super cheap.
Okay.
Right? Now, if you follow Meta, you know that there's some fundamental factors that you cannot see in these charts, which is why you should look into all these on your own time. They just fired a bunch of people. They've been buckling
Mhm.
down on making sure their operating margin's good. So that part's not reflected, right?
Yeah.
Google, pretty average EBITDA from the 2014, 2016 area. All right. Better than it's been in like the last 5 years. A little bit of a tail. That seems to be normal. The PE, I think, is quite attractive here from where it's been. And the price of free cash flow, also below average. It's not bad.
If you had just asked me to pick from that list which one I thought was closest to a sexy buying point, Google probably would have been my answer right up front. And
Oh,
looking at these
you
charts,
still get to choose.
okay.
Microsoft. Okay. Highest EBITDA it's been in quite some time. At least last 13 years. This year it's killing it. To be honest, P ratio, yeah, it's a little high, but they do have a lot of fundamental things going for them. I hate Chat GPT, but whatever. I don't. A lot of people love it. So, price to free cash flow, there are a little pricey, not out of this world pricey.
Hmm.
All right. Now, of those 6 stocks, I'm going to go back. I don't want to go to the last slide. Of those 6 stocks, which one do you think is the best value here?
Uh, you know, I would have to say Google is my would be my answer from that list of stocks right now.
And remember, Apple 10%, Microsoft 17.5. That's pretty high.
Yeah.
Nvidia 20, Google 31, AMD Meta 40 plus.
Yep. Yeah, I mean, don't get me wrong. Meta and Google are both very tasty to me, but Google, I would say, is the company that I think right now represents the best value from that list. It's probably the most recent stock I think I bought actually too. So I'm also probably a little bit biased there.
What's your second and
Meta.
third? Meta's your third or
Ooh,
second?
go down 3. Maybe AMD.
Okay.
Yeah. Yeah.
For?
Microsoft, I didn't really need more familiarity with. I own like 3 shares of it, like that I've held for like 10 years. But I need more effort to
Don't
really.
do your Vinny thing where you know it's a solid company. Yes, you need to spend
Yes.
10 hours looking at it. In
Yeah.
terms of just those things, where do you think it ranks
But from a buying now standpoint,
from a buying now standpoint?
it's not bad. But I would say we're talking about not bad between Microsoft and Apple right now, to me.
Yeah,
So I can't really parse those two out as far
fair.
as which one I think represents a better deal right now.
What's the worst one?
Nvidia. It's still
Yeah,
too freaking expensive.
it's incredibly expensive. Here's where I ranked all these in terms of what I'm buying for mine. So
Okay.
Apple, I kind of have it's at value, all right,
Okay.
based on EBITDA where it usually trades. I
Uh-huh.
don't really want to buy it. I like a mild correction. Nvidia, I really want to own it. It's just so stupid high.
Yeah.
Doesn't make any sense. I have kind of like a mild buy on AMD and Meta. I
Hmm.
do think that chips may be coming down a bit, so I like to hold once again. That's not reflected. Google, I completely agree, is the best value. It's not even close.
Yeah.
31% down, too. I actually have Microsoft as my second.
Okay. All right. Yeah, that's not far off. That's actually it's cute to see. We both completely did this independently, so this isn't
Hmm.
exactly that we both could have arrived at similar conclusions. But and
If
man,
if
Google's
I
a
was
hell
to
of a
buy
business.
four, it's AMD, Meta, Google, Microsoft, with Google, Microsoft being heavier.
Yeah, I think that's a very reasonable breakdown or analysis of major tech kind of companies right now as far as their valuation. What where I'd throw my money.
Yeah, and of course, finance is looking very sexy too. It's just there's more risk there, and after taking a bunch of risk on shorting and getting burned, I just want to hold for a little bit. So
Even if things don't go fantastically well, I don't think you're ever gonna be mad at yourself for saying like, I why did I buy Google? Like I
yeah,
don't think that's ever a thing you'll say in 20 years.
yeah, I agree, 100%. So I will be buying more Google this week. I'm gonna slowly kind of ease into it. So, all right, guys.
Catch the next one.